Today's discussion revolves around liquidation events, hedge funds offloading stocks, and market turmoil. Hey, welcome to AMC Daily. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But everyone, remember, this is not a financial advice video. A tweet from Just Dario highlights a significant liquidation event. Initially, I anticipated a relief rally, yet the aggressive selling by institutions suggests a weakening confidence in future stock market gains. This aligns with what Dario has previously mentioned and what we have consistently discussed on this channel. When liquidation events occur, various asset classes, particularly high-risk ones, begin to move in tandem. This correlation confirms that we are witnessing widespread market distress. A tweet from Unusual Whales further reinforces this narrative, indicating that hedge funds are liquidating stocks at an unprecedented rate. Even Bigham's responded to this, noting the financial sector's vulnerability. The current market landscape, coupled with rising volatility, VIX, and falling collateral values, paints a bleak picture. The extensive sell-off has multiple implications, one of the most crucial being its impact on collateral, a topic we have analyzed over the past few days. Hedge funds, financial institutions, and banks are facing mounting pressure as asset fire sales escalate. This could serve as the catalyst for an anticipated short squeeze involving AMC and GME stocks as these institutions and funds experience severe financial strain. Understanding hedge funds' operational mechanics sheds light on their precarious position. They rely heavily on borrowed funds, with declining revenues and soaring debts. Banks share similar struggles, particularly within the commercial real estate sector, where significant losses loom. While these institutions may report profits, their unrealized losses run into hundreds of billions, with derivative exposures in the trillions. This underscores the gravity of the situation and explains why market observers are closely monitoring unfolding events. A continued mass liquidation of stocks could trigger a substantial downturn in broader indices and individual securities, severely impacting collateral values. This scenario places short sellers in a challenging position as they rely on robust collateral to suppress stocks like AMC. A tweet from Wiz further exposes this unfolding crisis, revealing that NASDAQ is terminating high-frequency trading services and issuing subpoenas concerning metamaterials bankruptcy records. If anyone doubts the market's instability, this serves as direct evidence. High-frequency trading plays a pivotal role in stock price manipulation, particularly with meme stocks like AMC and GME. With NASDAQ ceasing these operations alongside mounting legal scrutiny, the system appears to be unraveling. For years, retail traders have accused institutions of systemic fraud, and regulatory bodies may finally be catching up. If algorithm-driven artificial liquidity disappears, genuine buy-side pressure could overwhelm short sellers. This is an aspect we have analyzed extensively. As liquidity evaporates, short sellers face mounting challenges in suppressing stock prices. Adding to their woes, the increase in short interest on XRT to a staggering 454.22% indicates that desperation is setting in. XRT has been historically linked to AMC and GME shorting strategies. Past data shows that when XRT was removed from the threshold securities list, AMC and GME experienced upward momentum as naked shorts were forced to cover their positions. Conversely, when XRT reappeared on the threshold list, both stocks faced renewed suppression. The latest spike in XRT short interest signifies another aggressive attempt to manipulate AMC and GME prices downward. Looking at AMC's price movement, another interesting observation emerges. When major indices like the S&P 500 and NASDAQ decline, AMC tends to follow suit. However, when these indices recover, AMC does not experience a corresponding rebound. This discrepancy is driven by heavy selling pressure, an issue we addressed in a previous discussion, where two notable candlestick formations illustrated deliberate sell-offs. These patterns expose the ongoing market manipulation that retail traders face daily. One of the most frustrating aspects for predatory short sellers is the steadfast commitment of AMC and GME investors. Despite years of manipulation, retail shareholders continue to hold their positions, disrupting the short seller strategies. These institutions initially expected short-term resistance, but now find themselves trapped, unable to force liquidations. Instead, they face mounting obligations to cover synthetic shares they created. Their predicament is further compounded by restrictions on liquidity sources. AMC Bigham's highlighted another crucial factor: the Federal Reserve's reluctance to allow housing prices to decline. The Fed holds trillions in mortgage-backed securities, MBS, many of which were acquired to rescue failing banks. Large asset managers such as BlackRock also borrowed heavily to support struggling financial institutions. If the housing market collapses, it could trigger another crisis, placing further strain on banks and the broader financial system. The Federal Reserve already owes $230 billion to the U.S. Treasury, reinforcing its reluctance to permit real estate prices to plummet. For months, we have discussed the critical role of commercial real estate as collateral. This market segment is now visibly deteriorating, forcing central banks and regulatory agencies to intervene. However, their actions are not purely altruistic. They are motivated by the intricate web of financial instruments tied to these assets. The ongoing stock market downturn, combined with extensive liquidation events, the elimination of high-frequency trading, and now the instability in real estate-backed collateral, leaves short sellers with diminishing options. They no longer have access to the reverse repo market, stock-based collateral, or real estate collateral. Their liquidity and capital reserves are dwindling. This explains their desperate attempts to push AMC and GME lower, evidenced by the extraordinary XRT short interest of 454%. As they lose financial leverage, their tactics grow increasingly aggressive. Yet despite their efforts, AMC and GME shareholders remain resolute. The market is at a crucial turning point, and the unraveling of these manipulative strategies may be closer than ever. Guys, that's all we have for you today. What is your opinion about AMC stock? Get involved and let us know in the comments down below. Thank you for watching.